Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Senior Director of Consumer Education and Advocacy for Experian. Ms. 84, good to see you. Only DeSuze, I'm sorry if I said that incorrectly. Tried. Good to have you here. If you're just joining for the first time, I'm here to answer your questions about credit reporting and credit scoring and fraud and identity theft, all of the things that are so important to us, especially now when with the coronavirus and COVID ID crisis that's going on, and all of the changes that we're seeing in the marketplace and in our financial lives and our personal lives. Want to make sure that if you have questions, we're here to answer them. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern. We're on Twitter at 2 o'clock Central, 3 o'clock Eastern on Wednesdays. And I'll be on Facebook tomorrow on Credit Chat Live, on Facebook Live at 11:30 a.m. Central. You can learn more about all those at ex.pn/creditchat. Our goal is to have ongoing conversations and to be available for people to ask us in whatever channel or platform they're using to help us all get through this time, which is so unprecedented. So thank you for being here. If you have questions, please feel free to ask. I'll do my best to answer. CCBC 100, thanks for joining, being part of the chat. We're hearing lots of things now around what's happening, particularly now with unemployment growing, with the incentives coming out. I'm starting to see, one of the things that's concerning me is I'm starting to see the fraudsters appear and the fix your credit people, if you'll pay me a bunch of money people, so the illegitimate credit repair kinds of firms out there that are hoping to prey on our fears and our concerns and our uncertainty. So please be careful about, when you get things that sound too good to be true, things like understand that with a stimulus check, the government is not going to call you. They're not going to write. They know where to send the check or how to deposit it in the account you used for automatically depositing your tax refund checks. Or for that you use to pay your taxes, if that's the case. So you won't hear from anyone from the government saying, where do I send your check? And so be aware of that. There are no companies that can expedite those payments. So there are those out there saying, if you pay us, we'll expedite your stimulus check payment. That's a fraud. Don't fall for that. Also seeing from people saying we can fix your credit and get accurate information removed if you just pay us up front. The problem with that is they can't claim to remove accurate information, even if it's negative, and they cannot take payments up front. And for some reason, my dogs are deciding to talk. And go figure. Tis that day and age. They will hear our dogs and our kids and others. And I've said yesterday on our credit chat, just smile. It's real life. And we're all going to have those things happening. Beef fried rice, good to see you. Sounds delicious, too. Big J 2120, welcome to Periscope and for joining Thon 16955 Thon or Thon. Thanks for joining 16955. Ms. ED4, during this crisis, are the creditors allowed to post late payments on credit reports? Not late, but just asking. So what's happened is this: the CARES Act, which Congress passed, if lenders are working with people as they are supposed to, no negative information should come to your credit report if you are affected by COVID-19 as a result of job loss or reduced income. So they have requirements to implement forbearance programs or deferment programs. The credit reporting companies put in place immediately when this started our crisis response programs for businesses and lenders that have special reporting systems or processes to report accounts in forbearance or deferment. So any kind of account can be reported. And Experian was supportive of the CARES Act because it does say that if you are affected by this virus, whether you have the virus or you are affected in employment, that you should not have negative information come to your credit report. Now, there are lots of us who are still working, lots of us who are still able to make those payments on time. We should continue to do that. If you qualify for assistance, the lender should report it. So be aware that if you are able to make payments, if you're still employed, you're not infected, and don't qualify for the forbearance programs under the CARES Act, and under lenders policies, then your accounts would still be reported. So that's why it's so important that you're talking to your lenders. Reach out. They know and are in a position better than Experian and the credit reporting companies to know exactly who is affected, because you're working with them, your accounts are with them, you have a way to contact them and verify. You can also dispute through Experian as well, and we will be able to work with your lenders. But notify your lenders. We all have to be proactive. So call your lenders and talk to them. Experian has a coronavirus resource center that you can go to, experian.com/coronavirus. I believe so. Let me look, because I don't want to mess this up. And we just changed the URL this morning to make it easier for me to remember. So go figure. Make sure it's going to the right place. So you go to coronavirus and you will find, and so it's experian.com/coronavirus. You'll find a message from Craig Boundy, our CEO. You'll also find links to how to work with us and connect with us, and lots of educational information, including a link that says COVID-19 coronavirus credit card and debt relief. If you go to that page, it includes a list of lenders and links to their websites for that explain how to contact them, what you need to provide, how to work with them to make sure that your accounts are reported as in forbearance or deferment in compliance with the CARES Act, and to make sure it comes to us so your credit history is protected. So lots of information there, experian.com/coronavirus, and you will be able to find that information. So should be able to be protected. Your credit history should come out of this with no negative information if you're affected by it. If you are working, paying your bills on time, there won't be any negative effect either. So, so the answer is no, you shouldn't have negative effect. I bought a house in January, paid off another mortgage off, and my credit score's gone down. Why would it drop so much? So Racing Ryan 34. So you had several big things happen in your credit report. So you paid off one mortgage, so that mortgage was reported as paid. Anytime you have a large debt that's paid, that status change might initially cause your scores to go down a bit. In the end, it's positive, but the scoring systems look at a big status change like that, and it creates some instability, and it might cause your scores to dip a little bit. Usually not very much. A mortgage more than, say paying off a credit card, something like that, but or a small installment loan. But you will see a decline in the scores generally a little bit as a result of that. At the same time, you opened a new mortgage account, which is usually the largest debt any of us have. So you have now this very large new debt that's being reported to your credit report, and there's no history yet to show that you'll pay it on time. So that can cause your scores to dip as well until you start to make those payments and you show that it's going to be fine, you're managing it well, and it's a positive thing. So that's why I would say don't look at your credit scores immediately after making big changes. You made two great big changes very quickly. Actually, I refinanced and paid off a mortgage and had a new refinance last year. So personally, and I did not look at my scores right away. I know that it kind of went to the same thing. I have the monitoring service from Experian, so we saw a little decline, but they come back up. So I would expect them to come back up as you make those payments on time. Give it a few months. So January, February, March. So April, May, now going forward, you'll probably see them start to rebound and come back up if you're making those payments on time, would be what I would suspect, because that's what I usually see. So that's almost certainly what happened. You paid off one huge account, one debt, and you opened another big account and big debt. And so there's a lot of fluctuation, new information in the report that caused it to shift. And scores will do that. They'll go down, they'll come back up. That would be my guess. Chris Bertrand, 26, thanks for joining. Second Chance, thanks for being here. Good to see you. And you're very welcome. Please feel free to ask any questions you have. If you're just joining, I'm Rod Griffin. I'm Senior Director, Consumer Education and Advocacy for Experian. This is Credit Chat. Try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern. And maybe on a positive note, because of what's going on with COVID-19, I get to be here more because I don't travel as much. So I'm actually home and literally at home and able to beyond. So if you have questions, please feel free to ask anything you would like to ask around credit reports and credit scores and fraud and identity theft. I'll do my best to answer. We're seeing so many things happen now with what we're all going through that it's important that we share information. We're trying to be as available as possible. We're launching new opportunities to connect with us on what we're calling CreditChatLive on Facebook. We're on Twitter. We're on Periscope almost every day of the week. So I want to be able to connect with all of you. So don't be shy about asking any questions you have. We're hearing lots of things around what we're seeing. Ms. ZD4, is this a good time to buy a home or should we wait? Another great question. And one of the things that's always curious about a time like this is that many people are being very negatively affected through job loss and income reduction. But a lot of us are still able to work, still able to have stable income. We hope it continues that way. And as most of you probably know, we're seeing interest rates decline. We're seeing, the Fed reduced interest rates to zero. That's how much that's the interest rate they charge to lend money to banks, which in turn will typically reduce the interest rates that they charge to consumers in response. So interest rates are lower, in some cases lower than they ever have been. So it creates some opportunity potentially. So if you are in a position where you can take advantage of financial opportunity, lower interest rates, lower costs on some purchases, it might be a great time for you to do that. So you have to look at your overall financial picture, make sure that your employment, your income is stable. But if you are, it might be a good time, but you have to be confident that you're going to be able to get through this time as well. So it's that uncertainty that's hard to address for a lot of us. Ms. Precious 74, thanks for joining and being part of the Credit Chat. DLF 1019, why don't you have a credit score? The real question might be, why don't you have a credit report? So there are two things that have to happen. You have to have a credit history or a credit report established one of the national credit reporting companies so that there's information for a score to be calculated. That's the first question I would have. So do you have credit in your name? Do you have open active credit accounts, or at least one open active credit account so that it's reported to the national credit reporting companies, reported to Experian, so that you have an existing credit history? That's step one. If you do, how long has that account been open and how long has it been active? So if you have an account, you need to use it periodically. We always recommend like once a month, make a small purchase, pay it in full. You don't even have to wait to get the billing statement. Just make the purchase and then turn around and pay it so that there's activity reported to the credit reporting company. And then you would have that activity in the report. You need to have 3 to 6 months of activity in an account in most cases. With Vantage Score, sometimes as little as 1 month, but generally 3 to 6 months for that account to be included in the score. So and you just answered the question. You don't have any accounts in your name. So if you don't have a credit report, you wouldn't have anything to score. So you need to have access to or have your name associated with an account, which means you can do several things. You could become an authorized user for an account with a family member or friend, which means you would have permission to use the account but are not responsible for the debt. That would create a credit report for you. You could open a secured account at a credit union or bank. So you make a deposit in a savings account and they issue a credit card tied to that savings account. And if you don't repay the balances you charge, they can take the money out of the savings account, but then they'll report the account late. So it would have a negative effect on your reports. You have to make those payments on time. So a couple of ways. You could have someone co-sign for you for a small loan. So a number of ways, but you need to have that account open. Once you do, you'll need to have that activity for a few months. And then you would begin to be able to be scored. But your credit history would be able to be scored, your credit report. So that's what the process would be like. In the meantime, if you have an account open and you have a credit history that's existing and you're building your credit history for the first time, you raise a very good example of the reason Experian created Experian Boost, which is a service that lets you have your positive, and that's the keyword, positive, cell phone payments and utility payments, things like cable TV, added to your credit report. So if you go to Experian.com/boost, you can learn how to do that. It's a free service. You tell us how you pay that utility or that cell phone. We'll go to the account once a month, capture that payment, and add it to your credit report as an account that shows positive information. That can help boost your credit scores. And what we're seeing is people with thin files, which is what you would fit into, meaning you have fewer than 5 accounts in your credit report, or a very short credit history. We're seeing on average about a 19-point increase in credit scores, and Experian goes back 24 months. So if you've had 24 months of cell phone payments, we can capture all of those, and you have 2 years of history for that account right away. So we help show that you would be a good credit risk. You just haven't had a traditional account. And so it can help through this to help establish a history. Also, I've been hearing from people who are telling me that Boost is helpful for them through this time as a tool to help them bolster and kind of support their credit scores as they go through what the coronavirus issues have caused around job loss or income reduction, those sorts of things. So it might be a helpful tool to help as we go through this and help hold those scores up or improve them after we get through this too. So something to look for. I have a mobile phone account with Verizon. So they wouldn't report it, but if you're paying that mobile phone account through a checking account or savings account, I believe we now can actually capture credit card payments, but you'll find that for sure on our website. So there's been some recent changes. You give us permission to go to the bank account that you pay it through, because cell phone providers and utility providers don't traditionally report your positive payments. If you don't pay them, they may report a collection account, or negative information, but they don't report the positive information. And that's why we created Experian Boost. It gives you credit for doing the right thing, for paying those cell phone bills on time, for paying those utilities on time, because they're credit-like and they work like credit. And it's a means to show, and all of our research over years of research has shown that people who are paying their utilities on time and their cell phone payments on time, if they have a short credit history, actually represents the fact that they would be a good credit risk. They just haven't had traditional accounts and so don't have a traditional credit history. So that's where Experian Boost came from, is to help people gain access to traditional credit, improve their credit scores, which helps them drive financial inclusion or achieve financial inclusion and give them access to lower cost, lower fee, non-predatory kinds of lending and financial services, so you can be more financially successful and break cycles of predatory lending and those sorts of things. So really a powerful tool to help people do that. And it's all permission based, so you control the information. And we've been doing it about a year now. Charles Dose, thanks for joining. BCI 1974, thanks for being here. Yeti Monster, thanks for joining. If you have any questions, please feel free to ask. I'll do my very best to answer. And if you're just joining, I'm Rod Griffin. I'm Senior Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern. I'll be on Facebook Live tomorrow at 11:30 a.m. along with my colleague Christina Roman. We're going to talk about a lot of coronavirus, COVID-19 issues and the way we can address those problems, what's happening, and the things we're hearing about, and we'll be live to answer your questions if you want to join us there as well. Nobody, again, thanks for joining. Is credit localized to individual countries? And the answer is yes. Every nation has regulations that dictate how credit reporting works within that country. And so credit reporting does not transfer across national boundaries. So Experian is actually a global company. We have credit reporting operations in multiple countries. We actually operate in almost 40 countries. We don't have credit reporting systems in all of them, but in a lot of them, we have credit reporting divisions. And your credit report, for example, I'm in Experian North America. Your U.S. credit report never leaves the United States. If you happen to work in the UK for us and you move to the US, your credit report from the UK doesn't come with you. So even though you work for Experian, your Experian report doesn't transfer to the US. Our CEO actually tells that story that when he moved here, he had to start over because his Experian credit report in England didn't transfer to the US because they operate differently. The things that they report are different. The way that the reporting systems work are different. The regulations around how you share that information and who can have access are different. So they don't cross national boundaries. So your U.S. credit report does not go outside of the U.S. Or vice versa. How come some credit cards companies understand this pandemic and they give me 2 months of no minimum due? So there's several things happening. One, you should be talking to your credit card companies and your other lenders. If you are affected by COVID-19 and the coronavirus, the CARES Act has been enacted that provides protections for you, that requires that lenders, if you're affected, report your accounts as in forbearance or in deferment, for example, so that your credit history is protected. And we're working with them to do that. And to make sure that they can, we actually implemented and have a process in place for crises like this that we implemented before the CARES Act started, that enables lenders to report any kind of account in forbearance or deferment, so that you are protected. And so we're supportive of the CARES Act because of the requirements it has in place around what lenders must do. So if you're affected and you qualify, they can report those accounts in deferment or forbearance. So talk to them about that. Now, some may be doing it proactively. I've heard from a few who have said that's the case. So just look at your question again. So some have given 2 months no minimum, so that could be a forbearance of 2 months. Some are going 6 weeks or longer. It just depends on the lender. So talk to the lender in your situation. They'll look at it and should be able to report it. And like I said, I've heard of some who are doing it proactively as well, so no payments are going to be due. But it depends on the lender. If you go to Experian.com/coronavirus, you'll find a link that provides that goes to a page that has a list of lenders, links, financial institutions, nonprofit or non-financial institutions, as well as government agencies. So reliable source of information to get you to the lenders you might work with, and gives you information about their processes, their policies. So good place to go for that information, to make sure you're able to connect with your credit card providers, other lenders, so that you can get help and make sure things are working like they're supposed to. One credit card company told me I have to make double payment due next month. Not sure. I mean, if you have a late payment to become current, they might have to do that. I'm not sure what the issue is. Again, it's their policies as well. I'm not sure. And the other thing you should think about is, when you're going into a forbearance or deferment agreement, make sure you understand what the requirements are. The things like, will interest accrue during the forbearance period? If so, it could mean that your payments that are due could be higher when you come out of forbearance, because you now have to pay that accrued interest as well. Does the time that's your account's in forbearance get added to the end of, for example, an installment loan to the end of that loan, so your payment period then gets longer? The paid off date now might be further in the future. Understand what those terms are and what the implications are, so that you're prepared for those, because there could be some different terms. Make sure you know what they are and ask your lender those questions. Do I foresee a general dive in credit scores? It's hard to say. And right now, my feeling is no, not huge, depending on how long this lasts, depending on, what happens when we come out of it. Because of the processes we're putting in place, because of what lenders are able to do, and because of the work that our governments are doing around what can be reported and how and under what circumstances to help people, I'm hopeful that we won't see a significant dip in scores or drop in scores. I think this is a different kind of situation than we saw when we entered into the recession a decade ago, when there were underlying business issues. This is a situation where nobody knew or could predict that this was going to happen, and there are steps being taken to make sure that consumers are protected. And I think I'm hopeful that scores will not be hugely affected, and I'm also hopeful that if we do see changes in scores, that those issues will be taken into account, and so we'll have less impact on lending decisions. And so I'm hopeful, and Not right now, and it takes time as well. So, that's going to be a question. Again, how long will this last, and what's going to happen as we come out of it? What are the percentages that credit scores are made of? So, what goes into a credit score, basically? So, all credit scores look at 4 or 5 specific categories of information. The first and most important for every credit score is your payment history. So, are your payments made on time, or are they late? If they're late, how late are they? Are they 30 days late, 60 days late, 90 days late? And that's something to understand too as we go through to what we're going through now. A late payment in credit reporting terms is a full billing cycle late, not just a day late or 2 days late. If your payment due date is today, but you don't make it until tomorrow, that won't affect the credit report at all. The lender would still update it. It might cause the lender to charge you, higher interest or late fees, that sort of thing, but it doesn't affect the credit report until you've missed a full billing cycle. That's why it's 30 days late, 60 days late, 90 days late. It's usually 30 days in a billing cycle. So the most important factor is your payment history. Are you paying on time? Are you late? When we say late, 30 days or more. And that will account for anywhere from 30 to 35 to 40% of a credit score, depending on the scoring system. So huge. The second most important factor is what we call utilization rate on your revolving accounts. Revolving account just means credit cards, because you can carry a balance or revolve the balance from one month to the next. So your utilization rate, your balance to limit ratio. So if you add up all of your balances on all of your credit cards, you add up all of the credit limits for all of your credit cards, and then divide the balance by the limit, you get a balance to limit ratio. The higher that ratio is, the more the impact will be on your credit scores. That will be another 30 to 35% of your scores. So you're talking, 60 to 70% of credit scores are paying your bills on time and keeping your balances low. By far the most important factors. So if you're paying your bills on time and keeping your balance low, your scores are going to be fine. The other things that go into credit scores kind of build on those two things. They include what's the length of your credit history or the mix of your history. So do you have different kinds of accounts, and how long have they been open, and how long have they been paid on time? Or how long, were they late in the past, that kind of thing. So the mix of credit, what's happened recently with your credit history. So have you applied for new accounts? That's where inquiries come into the mix. As well as other things, like if you missed a payment, was it within the last 3 to 6 months? Was it further in the past? The more recent things happen, the more negative effect they will have. So those are another, so length of history, mix of history, what you've done recently, and then at most there's sort of a, what's your overall capacity, and that's like with Vantage Score about 3%. It's a small percentage, wraps up that 100% amount. So it will all depend on if you have accounts that are open, you're going to be building the length of history. You're going to show that you're doing things well and on time, and you're not going to have strange things happening recently. You're not going to take on lots of new debt, or apply for lots of new credit. So pay your bills on time, keep your balances low. That's going to be 60 to 70% of the score. The other 40% will be the length of your history, the mix of accounts you have, what have you done recently, for the most part. So, those 4 or 5 categories. And so you take care of those things. There's just no big secret. What's the big secret to credit scores? And the big secret is there really isn't one. Just you have to pay those bills on time, keep your balances on your credit cards, and pay them off in full if possible. You don't have to carry a balance either. I hear that once in a while. You should only pay 95% of your balance to help your scores. That's not true. If you only pay 95% of your balances, that means you have 5% remaining. That means you get to pay interest on that 5%. It's going to cost you more money, but it won't do anything to help your credit scores. That you made your payments on time well, but that balance isn't. Is this a recession now? No, I mean, I don't, not yet. And I'm not an economist, so I'm not really the person to declare that or, to recognize that. Others far more qualified than I can talk about credit reports and credit scores. what's happened. But now we're in a unique time. That I can say with great confidence. My FICO score is higher than the credit score. No, so FICO score is a kind of credit. It's a credit scoring company. Credit scores, FICO is like saying Kleenex or Xerox or Chevrolet or Ford. It's a brand. It's a company that creates credit scores. They have multiple credit scores on the marketplace. For example, the FICO 8 is the most commonly used score in the market by lenders today. There's FICO 9. They just announced FICO 10 and FICO 10T that will be coming out. There are other competitors. So Vantage Score is a competitor to FICO. Vantage Score 3.0 and 4.0 are in the marketplace and strong competitors. So there are lots of different credit scores. When you talk about FICO, you're talking about a company that creates credit scores. So FICO score has become synonymous with credit score or risk score, the same things, unless you're talking about specifically a FICO score from FICO. So be aware of that. And I've seen them confused. I've seen people reference FICO scores but give a score from a different company, which can create confusion. So make sure you know what the score is, which company provided it, what the scale is when you're looking at the number. Esteban Funny, shall we eat our dandruff for saving food money? Unfortunately, I don't really have enough hair or dandruff, thankfully. I'd probably starve if that were it. So thank goodness, though, for that. Don't think so. I'm more worried about what I'm going to do in a couple of weeks when I have to cut my hair. I don't know exactly what I'm going to do. I'm hoping we get something changes, or I don't know. I'm kind of worried about that. I might have to go I don't know if this is funny or not, but do like a full Matt Lauer and just do a buzz cut. Don't know, because I'm not a hairstylist. TransUnion is showing insufficient data on your score. Why? Well, it's a good question for TransUnion. I'm with Experian, so I can't speak to their credit reports. Generally, if we see that, it just means that you don't have enough credit history to calculate the score. There's not enough information. So that would be my guess there. But they would have to tell you, or your lender, if you're working with a lender, they would have provided, if you didn't get approved, they should provide, must provide under law, an adverse action notice, or a declination notice, we used to call them, but an adverse action notice that provides a score they used, an explanation why you were declined, and information to contact the credit reporting company they used for the report, and some additional information. So if that was the reason or where you got the information, check, follow the instructions there. If it's from another source, talk to TransUnion. And ask them why, because they would be the ones to tell you. It's hard to make a payment when your job is gone. Yeah, and it is. And that's best friend advice I can tell you. It's affecting my family too. I have a daughter whose job has gone away. She's actually she worked for a dentist office, and she's actually volunteering time there to help with emergencies and things. So hoping this turns around. And so that's why it's so important to talk to your lenders, because they can provide assistance, and the CARES Act requires that they provide assistance. So check with them, make sure it's being done, because they can tell you exactly what they can do to help. If I leave the country more than 7 years and then return, does the score persist or start from scratch? So Zier, your credit history, if you don't have any open accounts in the U.S., if you move outside the company, in time, those accounts will be deleted from your credit report. There will be no activity. First, so a couple things happen. Let's kind of walk through this. So if you leave the country and you have no open active accounts, so there's no activity in the accounts. If you have an active account or active accounts, open accounts, but you don't use them and there's no activity in them, even though that report is still there and the accounts are still being updated or reported to us, there's no activity to report. And so the credit scoring systems, because there's no activity, may not be able to calculate a score. So you would still have a credit report, but you may not be able to have a score calculated because there's no activity for the score to consider. So that's the first issue. If your accounts are closed, we will keep those accounts for up to 10 years, for 10 years from the close date. But if you're outside of the country, eventually those accounts will begin to fall off the credit report and your credit history would disappear. So you may come back and not have a credit history at all. So the answer is yes. I mean, eventually your credit history would disappear. You would start from scratch. What's the whole cost of the government aid per family? And that I don't know. The whole cost, what's the whole cost of government aid per family? And I don't know. I mean, that's beyond my math skills and knowledge, I'm afraid. So that's a good one for the government agencies that might be able to help explain that. But again, thank you all for the great questions and for being part of the Credit Chat. If you're just jumping in, I'm about to sign off, but I'm Rod Griffin, Senior Director, Consumer Education and Advocacy for Experian. I try to be here 1:30 Central, 2:30 Eastern to answer your questions about credit reporting and credit scoring and fraud and ID theft. All those things are so important, especially now. One more question, I'll answer this, and we'll call it a day. What's the first best way to start a credit history? The answer is you have to have an account that's reported to Experian or the other national credit reporting companies, which means you have to open an account. Several ways you can do that. You could get a small, like retail or other loan for a small amount. It doesn't have to be large, a few $100s, and have that and make sure that's reported. You could have someone co-sign for you for a loan. So you have someone say, if they don't pay it, I will. And that would then be reported and establish a history. You can open a secured account with a credit union or a bank. That can help. It would be reported as an account and open that credit history. You could be added as an authorized user to someone's account. So you're given permission to use their account, typically with a credit card. And that would be you would be reported as an authorized user for that account on your credit history. And that would open the history. From there, I mentioned Experian Boost. Once you have a credit history in existence, today you can have your positive cell phone payments, your positive utility payments added to your report. You can learn how to do that at Experian.com/boost. And that can help improve your scores as well because it shows that you are making credit-like payments on time that mean you're a good risk. You just haven't had the history yet. So check that out, Experian.com/boost. It's a free service. It's permission-based. So if you start and you don't want to, you can tell us stop and we'll stop. So check that out. Have I heard of self? I'm not sure what that means. But if we're talking about self-reporting, really, I've heard people say that you really can't. You have to meet membership requirements and other things to report to us and around security and those kinds of things. So it's not practical for an individual, if that's what you're thinking. But you have to have that account. Once it's open, active, you'll be able to build that history over time. So not an investment advisor either. So thank you all so much for the great questions today. Join us tomorrow on Facebook Live, 11:30 Central for Credit Chat Live. I'll be with Christina Roman, my counterpart and colleague, and talking about things around coronavirus and what do you do to help get through this time, as well as answer your questions about credit reporting, credit scoring, fraud, ID theft. So please share. Check us out, ex.pn/creditchat. You can learn how to join us on Facebook, on Twitter, and on Periscope. So we hope to see you all. Please stay well, please stay safe, and I'll talk to you all again very soon. Take care, everyone.